Hey everybody, I'm Jen. Welcome to another episode of Blockchain Banter, Mastering the Market, Trading Crypto. I am here with Keith Allen, co-founder of Material Indicators, TA and algo trader, order book analyst. Keith, thank you so much for joining me again, along with Dr. Mark Richardson, project lead at Banter and Carbon DeFi. Mark, thank you for joining also. Crypto Koryo is going to be joining us a little bit late today, but he'll be here also to kind of give us a little bit of his Dune Dashboards and the leading narratives right now, and if anything has really changed over the last week. Keith, maybe you wouldn't mind starting us off if you want to share your screen. Maybe are we going to have a look at your FireCharts? I noticed that you were talking this morning about how we went over 70 again, 69, where the liquidity was looking.
Well,
We
it
did.
went away.
Okay, that was fast.
I've been focused very much on that prior all-time high, that 2021 top of 69K, and we've just really had a hard time maintaining support at that level. We have not yet validated an RS flip, in my opinion, and I will share my screen and show you why I feel that way. Let's share this one. Oh, let me get it on the right. Let me get it on the right thing. Okay. So there it is, I think.
Do you have a ton of tabs open on your computer all the time too?
Yes, I do.
It's just kind of becoming part of becoming an adult, I feel like.
Yeah, right. So you're seeing my screen now, and I have this oval of interest highlighted here. As you can see, this is the 2021 top, 69K. And we've talked about this in the past several episodes where we've just had a real hard time holding support above this level without wicking below. And every time I see a wick below, that makes me think, hey, we got some weakness here, right? So that's happened again and again and again. And after the weekly candle open, we were off to a good start. We closed the weekly above 69, above that level. Wasn't a green close, but it was above 69K. And now we've broken down and we've lost that level. We just wicked below it just a few minutes before the call, and it looks like we're potentially going to slide back down there right now. So this to me is indicative of a sign of weakness, right? Here we look for secondary support at the 21-day moving average, and again, this has been an important level through most of the run, but as we've had this drama up here around 69K, we've also had drama around that 21-day moving average, which then sends me looking at the 50-day moving average as support. And you can see we have some confluence here between the 50-day and my trend line. We could talk about lines and technical analysis and how subjective they are. Whatever makes you happy, right? What I'm looking for is confluence between where these technicals are and where liquidity is in the order book. And in my analysis this morning, I highlighted the fact that there just does not appear to be much bid liquidity in the order book at these levels. And if I take it down to the intraday chart, you can see that, right? We've just broken down from 69K. And what led to this, and this is something that anybody who questions whether there's alpha to be gained from order books, I'll tell you, if anybody who listened to or watched my analysis this morning, prior to this, I was talking about this ask liquidity coming down from up above, right? We saw this is the most noticeable one, but you've got other areas that liquidity, was brighter here, right? The hot spots are the heaviest volume of liquidity in the chart, right? So what was at one point upwards of 30 million up at this level, we started seeing blocks of it come down into this range. We now see it strengthening up here. We have a little bit coming down here and here. And this has, whether this is organic, whether you want to call it manipulative, it doesn't really matter. The net effect is when asks start coming down, and especially when bids start fading as well or getting rug pulled, it's just a clear sign that price is going to go down because it's the path of least resistance, right? And we see this kind of behavior literally around just about every economic report. We have tomorrow's core inflation numbers coming out, and this is a little bit speculative on my part, and I'm not an economist, so I'll throw all those disclaimers out there. But there's been some, for the longest time, uh, Fed Chair Powell has been saying, he's been telegraphing, and he does not like to surprise the market. So he's been saying 3 cuts, quarter point each, sometime before the end of the year, and they've maintained that messaging. And they've also said we need to see more data and be more confident that that inflation is trending in the right direction before we actually make any cuts. And in the past, I don't know, week or so, we've started to hear the other Fed officials who, work the media circuit and start the telegraphing of language around, of what they might be doing, um, have started to, I don't know, put a little FUD in the water for the market about whether they are going to indeed cut 3 times, or maybe cut fewer times, or maybe just wait longer in the year to cut. Everything is on the table. Nothing is off the table at this point. So, in terms of the inflation numbers, what we've seen so far in the recent months, and I would say from November, December, January, February, and certainly the earlier part of that, November, December, January, most especially, heavily influenced by the holidays. There's holiday staffing ahead of it, and holiday sales, big, especially in the US, huge sales around Thanksgiving, Black Friday, et cetera, et cetera. And so that may have skewed the metrics a little bit. So now, with that in the rearview mirror, perhaps we're going to see a clean inflation report tomorrow. And whether that is a cool report or a hot report remains to be seen. I think that the market is kind of sitting on its hands right now, waiting. ETF flows were pretty mellow for the new 9. And there's a guy from Bloomberg, Eric Backelness, if I'm not butchering his name. He calls these, so there's 10 ETF entities, right? 10 institutions. He calls the other 9 who aren't Grayscale the new 9, and Grayscale makes the 10. Obviously, Grayscale still bleeding, right? And we can argue whether that's them screwing up or them just minting money, because that's what they're doing with 1.5% management fees on these, or trading fees on these. They're essentially turning a significant amount of revenue through all of these sales at this point. This has leveled off a little bit, at least for the day. And the day prior, look, BlackRock was hot with 308 million.
Wow, yeah.
And then yesterday it was only 21 million in inflows. So I think that the ETF market is maturing, right? And maybe they're waiting to see what the inflation numbers look like. Maybe they're just looking for bigger dips. So I do expect dips to get bought. I do expect to see this market continue to evolve and mature, as opposed to what we saw in the beginning was just crazy euphoric buying because there was 10 years of pent up demand. Right now it's starting to
Yeah,
level off.
Keith, the only date that I'm seeing that's even close to yesterday was the 22nd, right? So what, like 2 weeks ago, something like that, a little over 2 weeks ago? Were there
Right.
announcements then that were kind of correlated with that you can see a pattern with yesterday's, or no?
I don't recall. And even, listen, even April 3rd was a little bit light coming off of the holiday, and it was even light for outflows from Grayscale. So I just think that the market is now starting to evolve. You remember when the ETF, once we got past the sell the news moment and the shock that Grayscale was selling so much, we started to see just a meteoric rise.
Yeah.
And Mark and I, especially, we talk all the time about straight lines not being sustainable. And we got some straight lines, right? I mean, let's look at the chart. We literally got just crazy straight rips up that I just think beg for corrections. I mean, look at this candle. That's a 22% weekly candle. And there was no retest back here. And so we've had a series of big moves without any retest. So it's reasonable to think that we could get a retest, but it's also reasonable to think that, gosh, we have the halving coming up right here. And how are people selling? Well, the people who ask that question are not traders. People are selling because they know that there are opportunities to buy lower if they can find those holes in the order book. And we can see here that we do have some thin areas in the order book that really pave the way for selling. Now, guess what else we see? We see whales selling and we see retail buying. Does anybody, do we need to have a quiz on how that typically ends? Right?
Is it going to be multiple choice?
So like, why? This isn't rocket. It's science, but it's not rocket science. And that's why I really love the order book. I don't trade this exclusively. Like I said, we looked for confluence. Where's the confluence in the order book? Okay, so let's zoom out a little bit, and we saw 69K is getting annihilated right now. So the next level, this got rugged here. Well, some of it may have floated up here. So conceivably this could hold, but there's stronger support down here at 65K, which has confluence with where the structure is down here and where we have local support established down here and the 50-day moving average down here. So you see right here the 21-day getting tested. This could very well hold. But if it doesn't, then we're looking down here. And if we should lose that, this is an area of really critical focus. If you lose this level at 59K, it's like 59.3. If you lose this, if you start making lower lows, then you have to go back and revisit the discussion about these areas of prior consolidation, at 52K, 50 to 52K range, and that 44 to 45K range. And these all represent, those areas, those numbers that we've floated, right? A 20% to 40% correction. Well, 20% gets you down here. 30% gets you down here. 40% gets you down here. And we can illustrate that on the chart, as you can see, right? What's 20% look like? It's like perfect right to that range. What's 30% look like? It's perfect right to that range. And see the confluence right here? My gosh, that would be, this would pacify every analyst, myself included, who says we need to see that deeper correction, right? And 40% gets you down into this range where we have confluence right here. Now, there's currently zero sentiment, in my opinion, to go that low, right? Let's zoom out of the order book a little bit and see that we don't have any liquidity down in that range that suggests
20 or 30%.
What's that?
The 20 or the 30%? The 30%?
Yeah, I mean, 20% gets us down to the 60K range, and it's thinned out a bit, right? It's thinned out considerably. So it's reasonable to think that we have some liquidity up here. Is this going to hold here? That's above 60. This is going to update for us here in a second. I'll take it in a little further. We can see it maybe a little bit better. So we can see price moving down this way. We still have this, what remains from this level of support, 59 to 62K. We still have liquidity stacked in this range as kind of a last line of defense. But I think that 65 looks pretty solid in terms of where confluence is on the chart. We're not seeing any sentiment down here at 50K or 52K, which would be the 30% correction. There's no bid liquidity here. Now, if we lose this, sure, it's going to come down. It's going to move into place. But geez, if we lose this, imagine if we lose this right now. I mean, it's a free fall. So, I just don't think there's sentiment for that with the halving so close at this point. So that's really the long and short of what I'm looking at the moment. And I'm just trying to be patient, right? We have this report coming up tomorrow. We get these dips. I want the dips. I'm buying them, right? And so I just this morning sold my highest entry on my longer term position was just above 70K. I sold that. I hit a couple take profits on it yesterday, and I sold the remainder of it today, up around I think 7,800 or so before things broke down further, because I saw this breaking down. And it's a small position, so if I'm not able to replace it, it's not a big deal. It's not going to have a huge influence on my cost basis. But if I can improve by buying lower, and I could already do that now, but I'm going to be stubborn and see if I can, get down here maybe. Actually, I think I do have a bid in around here, a small one, to just kind of support, what I'm doing and growing this longer term position. But I'd really like to see this one get hit.
Keith, how much of that liquidity do you really wait to see shifting before you kind of make your own personal moves?
When you see when I start seeing, so there's confluence here, right? There's the momentum shift. I saw liquidity moving. I saw a trend precognition signal, and I saw price dropping back into below the trend line that we just broke, the other day. So all of these things collectively, it's not one thing that I react on. It's the total picture, right? And look at this. Now we're getting a new signal here as price continues to break down. This is another trend precognition algo. So there's enough pointing to downside for me to do some fine tuning on my positions. I'm not doing anything drastic because I've had a hard time improving on positions that I've sold, previously. I've been struggling. I sold a little bit in the 63s and a little of the 66. And then, once we broke up above into the 69 to 73K level, I sold a little bit up there. And then, at this point, I'm trying to improve on what I sold up at this range. So I'm just trying to be patient, and I'm looking at, when you see it happening in the order book. All right, this is the least speculative I can be, right? What I'm seeing in the chart, I don't have anything to gauge this with, right? Other than my lines of technical, analysis, which we know are subjective. But I don't know if there's literally support here to hold this or not until I look at the liquidity in the order book. So when I see these breakdowns happening, I can react to them, and it's also, it's risky to react too quickly. Look, Mega Whales just sold again, just a couple minutes ago. So this is more, this to me, this doesn't make me think that price is going to shoot back up to here in the next 10 minutes. It could, but this makes me think that we're going to try and go at least down here to 60, closer to 68, maybe even 68.5. And this is changing, right? I mean, during my analysis this morning, we're seeing these pieces of the puzzle move. Look, see this piece right here?
Yeah.
Oh, that's only 7.7 million. Guess where it came from? It came from up here. It's not a lot. It's not a huge amount, but just the fact that it's coming down is putting pressure on price. And
How often does that update?
So on this version of FireCharts and 2.0, price moves and price and CVD are near real time, and then the chart background updates like every 3 minutes. So
it's great.
So,
Probably takes you longer to write like your reports in the morning and your analysis in the morning. You know what I mean?
it
Like,
does take me a long time. And I when I first started doing them, I wasn't even writing the description. And I have, we've got a big Asian community, and somebody requested that I, because they were having a hard time understanding, and because I speak quickly when I do it, they asked if I would write a description. And I think that's helpful. I think it's helping a lot of people. So I'm happy to do it.
I think it is. Like, it's just nice to have that sort of breakdown, and then they can read it and then refer back to the charts and see and read it again. And like, I know I do it in the mornings too. or throughout the day, because it's not like you just do them in the mornings.
And I think of stuff that I think when I'm writing the analysis, I'm thinking of stuff that I should have put in the live, but I do them, I shoot from the hip. I'm probably going to start doing them live pretty soon,
Yeah.
which gives me no chance to go back and fix anything. But
It's kind of really real though, because we talk about some traders that post and stuff like that online, and all of a sudden it's deleted or whatever it happens to be, right? So
I don't believe in doing that.
when you're going live,
you gotta live or die
and
by
this is
what
what
you
you always
say.
say. Yeah, stand by it. And you are the first to admit, I'm not always right, but this is what I'm doing. It's not my advice. This is what I'm doing.
Right.
So,
I
I mean,
just
I
show you how I
respect that.
do
I
it.
appreciate it.
I promise you, there's a lot of guys out there making more money than me, but for me, it's obviously I'm here to make money with trading, no doubt. That's my number one goal.
Right.
But to get there, that also means not losing money. And so I love making money, but I really, really hate losing money.
Right.
So
That's exactly the mentality that you should have. You should hate losing more than you like winning. That's
exactly. Well,
the
exactly. Because guess what? When I first started years and years ago, it was, man, I can't believe it's down. It's going to recover. I just want to close it green. I just want to close it green. Fuck that. You're going to get wrecked. Just suck it up, cut your losses as quick as you can. And, don't be trigger happy, have some patience. But the two things that have helped me the most over the years have been just the patience and discipline of being patient to let things evolve and being disciplined enough to cut losses, not ape into a trade, and be very calculated in what I do.
Do you think it helps, Keith, because you mostly just trade Bitcoin,
Mhm.
right? Do you think that that patience level is where it's at now from like your experience and that sort of, you know, um,
Well, for me,
yeah,
I have a hard time focusing on too many things. And so when I have, if I have a handful of alt positions open as well, and I have a couple, but if I have too many going, it gets hard for me because I can't sit here 24/7 and stare at the screen and stare at charts because I'm a work from home dad and I got other responsibilities. Um, I have to I have to find what fits
right.
for my lifestyle
Yeah.
um, of raising a family. And so if I have to monitor a dozen, or dozens of different coins every day and see what's happening and optimize this and get into that and that, I don't do very well with that. So I like to find coins or assets that I can focus on and track and get a, this order book stuff especially it's an organic living beast, and every asset has its own kind of personality. The meme coins, super volatile. Is there any rhyme for reason why Doge goes up or down with the exception of when, Elon
Elon
opens his
tweets.
mouth? No. So this to me is easier for me to trade. I mean, there was a time back in the day when I was on Binance, I could pick B&B calls like clockwork. I mean, just on what I was seeing in the order book because I knew what levels would always hold, how much liquidity it took to hold, and where it would bounce to and from. And I made a lot of money on B&B that way. Probably the most I've done on any single asset. But I definitely find it helpful to focus on, find things that you can focus on that you understand how they trade, and uh, and trade them, right?
Yeah.
To try and trade everything. I have bots that will scalp, you know, hundreds of shit coins. I don't care anything about those. I just let the bots do what they do, right? And those are quick, in and out scalps. They're small positions. They just turn capital, and
Right.
I don't necessarily care. There's a few that I will take out of those bots because of some history on those, but for the most part, I'm good with just the algo doing what it does. But in terms of what I trade manually and what I invest in, it's Bitcoin.
It's a nice way to maintain your sanity while still
I'm not sure
trading.
I've done that yet, but I'm still trying. But I'm trying.
From what we can see, you put on a good show.
I'm trying, and you can see right now, right? So just incrementally, we have a little bit of resistance appearing overhead. Trying to push price down. I will say that we're starting to see we have a little double bottom heading for a little triple bottom here and this is very, very short term intraday, right? We're talking, in the past couple hours. And that price does tend to like to bounce from this. And we do have lots of, I would say, opportunity here to go to the upside because it's pretty thin. But as we head to these economic reports, we often see this move happening, right? Let's say that they continue to clear this out, whether they clear it out, to 68 or whether they proceed down closer to 65. Once this is thinned out, it's much easier to move back up, right? So let's say they get it down to this level or, wherever it lands, and grind here until the economic report or even round trip it. Okay, this is something we also see a lot around these reports, right? We've got reports coming out Wednesday and Thursday. Conceivable to see this move bounce back up and then round trip before or after the the reports coming out Wednesday and Thursday. So CVD will give me some clues to that. Right now, the important ones that I'm watching are dumping. So I'm going to let that continue to happen before I come back in.
Yeah. Well, thank you so much, Keith.
Thank you.
I
Thanks for
love
giving
what
me
you
the
guys.
opportunity.
I think, well, yeah, no, but I mean, like, really just not just kind of what you're seeing, it's always nice to kind of get into your guys' heads, right? Like what your thoughts are when you're seeing it, not just what you're seeing. So I do appreciate that. And I mean, what you said about, what did you say? You like, you hate losing money more than you like making money, right?
Yes. Yes.
Yeah. No, it's funny when you put it like that because it seems so obvious, but it doesn't at the same time. Like you kind of almost have to train yourself to like take that and hold on to it, right? I
Yeah.
know I'm going to.
Somebody asked me yesterday. I was doing another stream yesterday and I flaked. I thought I had back-to-back streams yesterday because we moved up next week's, right? But
Right.
so he asked me if I had regretted selling some like yesterday when we were up, in the 72 range. And I said no. Nobody gets wrecked. You don't get poor from selling. You don't get poor from profit taking. Sure, there's more, did I leave some money on the table? Sure. I'm okay with that.
You
I'm
can
okay with
afford
that.
to not you can afford to not have made as much as possible an infinite number of times. But you
Right.
can only afford to lose a handful of times.
Right.
Yeah.
Right. So now, I'm now opened up to a monthly chart and this kind of shows the void of illiquidity even better here, right? You
It
see this
really
dark
does.
you see this dark space, right?
Yeah.
So, and it's also good to have some perspective here, right? In the longer term, whales have been buying. Okay. So what I'm doing now in terms of, highlighting this sell pressure that's happening now, this is a very this is short-term thinking. Okay. And this is me merely trying to improve my cost basis. But in the long term, we have a halving coming up here in what, 10 days?
Is it
So,
already in 10 days?
is it the 19th or the 20th?
Wow.
Whatever. So, and we know we could have a dip here. We can have a dip right after the halving. It's happened before. There's plenty of,
It usually
uh,
happens.
you're right. We've got lots of, I've shown you many examples of that in the past. So, and I'm prepared for that. So I just save. How do I prepare for that? I save some dry powder
Yeah.
because if that opportunity presents itself, I want to be able to take advantage of that opportunity.
I
And
think that's actually the like the event the more significant event that no one talks about associated with the halving. Because the halving itself is really sort of phase one of sort of a 2 or 3 step process.
Look at this.
The
This is
thing that
this is right. This is right around
yeah,
the last halving.
it just went
21%.
sideways. It actually, well, yeah, was that a 21% drawdown?
Yeah.
Yeah, exactly.
And then it
The
pumped,
most
and then there was another one.
the So I highly recommend, and I used to have this chart. I don't anymore, but I can remake it. It's not too difficult. The more significant event, in my opinion, is the first difficulty adjustment post halving, right? Because generally, what the halving does is it shakes out some of the old miners, right? The people that are like, oh, when this halving comes up, I'm not going to, buy the new miners. I'm just going to sort of liquidate and be happy with my Bitcoin journey up till now. And this means that sometimes the hash power of the network goes down a little bit and there's a difficulty adjustment. And after that difficulty adjustment happens, this is when the market starts to be able to accurately price in whether or not it's worth investing in new mining technology and so on, and new miners come online and that kind of thing. So there's the halving, and then there's a difficulty adjustment, and then new miners come online, and then there's a second difficulty adjustment. And it's those difficulty adjustments that I think are the true consequences of the halving being realized. And it's those that no one ever talks about.
I think you're right. And listen, most people, in the grand scheme of things, whoever's been listening to us will have some insight to this. Whoever just believes in up only after halving is gonna have a rude awakening. Look at this is back in 2016, right?
Yeah.
You had the halving, you had a 1 week green candle that went 4.75%, and then the next week down 2.5%, and that began a grind that went for 1, 2, 3, 4 weeks and took price down 30%. That is going to be, if that happens here, that's going to be a huge shakeout. People are going to freak the fuck out because they're like, what the fuck? We had a halving. Why is price going down?
You promised me that the halving was going to blah, 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 right?
Right. And they're going to go back to all their friends that told them, halving, dude, halving, buy the halving, buy ahead of the halving. And
exactly.
And in the long term, if they're patient, they'll likely be okay. But it's also worth noting, where does that breakdown occur from at this point, right? So we know that we have a high right now around 73,700 or so. So what we looked at as 20%, 30%, 40% were based on that all-time high, that current all-time high. But if price appreciates and we do start printing, up above this level, and we start grinding back towards this channel, I mean, we could conceivably be, up at these levels, and then that changes where what 20% looks like from there, and so on and so on. So those targets will adjust as price moves up to new all-time highs. You just got to be prepared for those corrections to happen, save some powder for them, and hopefully capitalize on the opportunities.
Thanks, Keith. We'll touch base and see what the liquidity has done next week too. I'm kind of curious to see if it continues kind of in this trend or if we see it reverse. And
I think this is I honestly think this will be a short-term thing right now. I think this is focused around what's happening with tomorrow's inflation reports. We can see, look, I just told you, triple bottom, and look. So now let's see. So here's what could be happening right now. And this only comes because I've watched this happen many, many times. Liquidity is too thin for whales to do any sizable buying right now. But look what green is doing. So they could be buying, this could be whales just downsizing positions to eliminate slippage. And this may be the beginning of the bounce right here.
I got you. You've mentioned that once or twice before too. It's not just the whales because of that slippage. The smaller orders as well.
Well, whales can disguise themselves in any smaller class. Retail cannot disguise themselves as whales because they don't have the resources to do it.
Right.
Oh, but look, they just got shut down. New block of.
Did that just pop in there? Did we just see that?
Yeah, it just popped in.
Yeah.
So we're watching it. We're watching the game board change in real time.
Yeah. Oh, I just realized. All right, we are at 8:40. Well, my 8:40. Keith, thank you so much. I'm gonna pass it over to Mark. Mark, are you gonna share your screen with us? What do you have planned for us today? You're gonna show us a little bit from the simulator or some
Yeah,
exotic
I've got
trading
a.
pairs you've been eyeing?
Well, I thought we would sort of return to basics because we've been looking at sort of meme coin things for the last couple of weeks. Can you guys see my screen yet or no?
Yes.
Yep.
Okay, perfect. I thought it might be good to return to some of the more important cryptocurrencies. Obviously, Bitcoin and Ethereum are the two most important cryptocurrencies. I don't think that that's uh, debatable at this point. And add a little bit of sort of qualitative discussion on top of what Keith is pointing out, because I think what Keith brings to this discussion is a sense of quantitation, which is, I'm a trained scientist, and quantitative data is always the superior way to make decisions. But I also think that sometimes, zooming out and just looking at sort of just the way that things evolve, right? Is there an emergent property in the aggregate of the data? And this is where I think sort of technical analysis was born. This is where trend lines and support and resistance lines kind of come from. And one of the things that I wanted to look at is the Bitcoin and ETH charts and sort of historically how they perform. And I'm always looking at very long time frame. So I generally try to limit myself to being the weekly time frame as the shortest time frame that I trade on. But I will also look at the monthly time frame and things to sort of get an idea of where we're at and evaluate how likely it is that things will continue up or continue down. I think especially on the monthly, you can see kind of what I'm referring to here, which is that during during an uptrend, Bitcoin is perfectly capable of printing green candle after green candle after green candle. We still have these corrections, and this is the thing that Keith is referring to. So even during this historic bull run, there was still a 40% drawdown, like right in the middle of it. And when you zoom out, it looks like nothing at all. But I promise, the people that had bought at the top of the previous month's candle were freaking out to see half of their value get evaporated in the next month. And it's worth pointing out where these months occur. We know that that May and September are generally very bad months, and so we're not too far away from May now, so keep that in mind. I'm going to move back to the weekly time frame just so we can have a look at exactly what I wanted to point out, and that is that Bitcoin has a very well-defined pattern during a bull market. And what I'm painted here are the 20 EMA and SMA closes. These are those two bright yellow lines, and you see that it kind of likes to skip off of these moving averages on towards the upside. And I like to put both on there because obviously this is, there's no hard truths to this, and I like to use both. Some people use the 21. I don't think it matters too much which one you decide to use. Some match better in some circumstances and others and others. But the point is that it likes to return to these moving averages. And as long as it stays above it, the bull market is likely to continue. And it's when it sort of breaks below it and then comes back and finds resistance at those moving indicators that we're probably in a bear market. The last bull market we had, and I'm not the first to have observed this, but Bitcoin never really came back to check the moving average. You can see that it sort of looked like it was heading back that way, but then continued moving higher. And this is when Keith and I say that we would prefer it to correct. You kind of want to come back and find these support levels because it means that you can continue higher. One of the analysts in the space that I have enormous respect for is his name is Ben Cohen, and during this whole period, he was saying, Bitcoin is ahead of schedule. That we would really prefer it to come back to check this level because it gives us more confidence that the market is going to continue higher. And a lot of the people that subscribe to that branch of analysis and that were paying attention to the things that were being said on that YouTube channel often blame the fact that, you know, we entered into this kind of double top on the fact that we didn't have these kinds of corrections on the way up. And this is what overheated the market. And you can see that even on the weekly time frame, the RSI remained way too high for way too long. And this means that, you know, that it basically runs out of steam too quickly. You know, it's a marathon race. You don't want to be sprinting the whole time. And so keeping that in mind, let's have a look at where we are and what we're hoping for, because it looks very much like, you know, Bitcoin has really failed to retest these levels. You might, you know, consider this wick down to be a test, and sure, that's fine. But, you know, if you're crossing your fingers that we just continue higher from here, well, I'm not sure that that is the best case scenario, because if you come back and have a look at this historic run, it came back to check very, very frequently, and it ran a lot higher. You know, the market had a lot more staying power than it did during the 2021 bull market. And so, if we're at this stage now, like, what am I actually hoping for? Because I would prefer it to come back and check this moving average here, so about a 20% drop, than for it to just continue higher from here, because I think it'll be a much shorter lived bull run, and it won't go nearly as high. And I think that the capitulation will be a lot bloodier. And the reason I'm bringing this up is because Ethereum does pretty much the same thing. And during the you know, the last bull cycle, you can see Ethereum actually did hug this moving average a little bit more tightly. It came back, actually dropped below it fairly briefly before making its all-time high. And this run was a lot more significant than Bitcoin's. Like, Ethereum did appreciate in value much faster than Bitcoin did over that run. So there is something to this. Like, I think coming back and checking these support levels at the 20 moving average or the 21 moving average is a good thing, and that we should hope for it. And what's interesting is that both Bitcoin and Ethereum have about the same distance to go to check these averages. So Ethereum's is about a 15% drop, and Bitcoin's, I think, is about a 20% drop. And, you know, some people will look at this and tell you that, yeah, you know, the altcoin markets are all garbage and Bitcoin's the one true currency, certainly the only true cryptocurrency, which is certainly Mike Saylor's perspective. But I'm a little bit more pragmatic than that. And I would think that the downside exposure on BTC is actually slightly larger, about 30% larger than the downside risk on ETH right now. And if you have a look at the Bitcoin ETH chart, and I'm pulling this from Vantage, you can see that it's actually in sort of a choppy area. And in technical terms, you know, it's actually revisited, or Bitcoin has revisited its, you know, these highs from back in June of 22, from June of 22. But it's also in what looks like a reversal pattern. It's not a very strong reversal pattern, so again, this is extremely qualitative. But if you just have a look at the RSI, it's definitely headed down. The RSI is headed down. The MACD is headed down. But the price action is kind of, I don't know, you might call this sideways if you want to sort of draw an arrow straight through the middle of this. Or you could call it sort of an uptrend over that same period. But either way, these are both reversal patterns. And so it's possible that that if Bitcoin is going to capitulate, it's going to capitulate faster than ETH. Or it could just mean that Bitcoin's going to go sideways and ETH is going to, you know, rally a little bit or something like that. But the reason I'm bringing this up is because you know, this is sort of one of those trading pairs that that you can trade on Carbon DeFi and sort of simulate and do not just, you know, this kind of qualitative technical analysis, and not just the quantitative technical analysis that that Keith is offering with respect to the liquidity levels. But you can also just ask the question, you know, what would it look like had I, you know, traded, you know, these levels? So what I'm going to do is I'm going to put BTC as our risk asset. I'm going to use TBTC because, as I said last week, I think that this should be the de facto representation of Bitcoin on Ethereum for anyone who's taking these things seriously. Let's just look at like the last 90 days. Actually, let's go back. You know what? Let's trade the last year. So this is actually not a terrible chart to trade. And again, coming back to what we were looking at on the BTC ETH chart itself, the actual depth of this channel is not too bad. You know, like it's 40% from the top to the bottom. Whereas if you compare either one of these coins versus the US dollar, it's, you know, thousands of percent from the top to the bottom, or from the bottom to the top, I should say.
Well,
So
even just in that local range that, you know, where the local bottom is, and ETH has been like really, yeah,
yeah, exactly.
I mean, you're
Yeah,
in
so
a tighter range, which is really probably ideal for trading this way.
yeah, exactly. And it depends on your time horizon. So it's not unusual for Bitcoin to come back and check some of these longer moving averages versus Ethereum, even during a bull run. Whereas during a bull run, it tends to stay, you know, very close to these faster moving averages versus the US dollar. And so you can very easily just sort of say, look, you know, inside of this range, I wouldn't mind, you know, taking some exposure to ETH if ETH rallies, and I wouldn't mind, you know, sorry, I wouldn't mind taking some exposure to ETH if ETH capitulates, and I wouldn't mind taking some exposure to Bitcoin if ETH capitulates versus each other, because really, you know, these charts are very, very similar. Whatever the Ethereum chart is doing versus the US dollar, the Bitcoin chart versus the US dollar is doing more or less the same thing. Obviously, there is some volatility there, and that's why we're looking at the ETH Bitcoin chart as well. So it is clear
Hello,
that, you know,
guys.
Koryo, how you doing?
Hey, Koryo.
Hey, can you hear me? How are you doing,
Yes.
guys?
Hey,
So it
glad you were able to make it.
Yes.
it is clear that Bitcoin is in a you know, it definitely is in an uptrend versus ETH. But that doesn't mean that this is necessarily going to continue, you know, all the way forever. And we do expect it to sort of turn around at some point. And I would expect that there's going to be some, you know, some sideways channel trading during that time. And, you know, to my eye, it looks like we may have already began that process. And the fact that that, you know, the Bitcoin RSI and MACD is losing strength versus Ethereum is probably a, you know, it would add some kindling to that conviction. So how would I trade this? There are, you know, you don't want to be too optimistic. I would probably, you know, scrape, you know, 20% off of the top of and the bottom of the channel, and then just see what it does. Now, because of the way that, you know, that Carbon operates, of course, we can just do this as two discrete limit orders. And this is the kind of thing that if you're used to, you know, trading on Binance or Coinbase or something like that, that you're probably used to doing, and we can have a look at that now. So, you know, let's say that we started entirely in Bitcoin. I'm just going to say, you know, 1, 2, 3, 4, 5, something like that. So, okay, $855,000 might be a little bit dramatic. Let's go down to 1.2 Bitcoin and 0 ETH. So this is basically representing the conviction that had we started about a year ago, that eventually Bitcoin was going to reach some sort of local top. And we're not calling the exact top so that we don't sort of overestimate, you know, or over-represent how well we would have traded. We're going to try and, you know, and approximate that we got within, you know, some distance of the top, but, you know, not necessarily the top itself. And we're also going to say that as Bitcoin loses value to Ethereum, that's fine, because we have the conviction that it's going to eventually continue its trend to the upside. And so if we simulate just those two limit orders constantly trading against each other, this is still a very healthy gain. And we're denominating this in ETH. But remember the performance versus, the performance chart is versus the HODL position. So if we're selling Bitcoin up here and then rebuying it down here, and this is versus ETH, we're actually improving the overall portfolio position 15% in either ETH or Bitcoin. It doesn't really matter how you choose to measure it. So if I just pull the slider back here, you can see that we made our first trade as the price of TBTC rose above our sell level. But then as, and you can see here in the bottom right, that's when we flip all of our Bitcoin portfolio into ETH. And then as the price came back down, that ETH was then flipped back into TBTC. And this is the beauty of tying together two different limit orders and having them constantly cycle back and forth. And so this is where that 15% ROI comes from. This isn't a reward scheme. There's no emissions or anything like that. This is just literally trading, probably the strongest trading pair or the strongest exotic trading pair anywhere in cryptocurrency, natively and automatically using the blockchains that they support. But we can also go back and say, well, fine, that's for the pure limit order. But what if we want to add a little bit more or represent our uncertainty a little bit differently? So instead of just saying, well, let's just take, a price cut by, setting our limit order arbitrarily somewhere below the top when we're performing these simulations. Instead, let's say that, well, when we set up these orders in the first place, we already have some intrinsic uncertainty about where the price is going to go. And that's what these ranges allow you to do. They allow you to say, well, the price is going to get somewhere between these two levels. And I want to be, selling Bitcoin as it moves through that range rather than at a specific point within it. And to the downside, I want to be buying Bitcoin within that range. So again, I'm going to be, moving these apart just a little bit so that I can try and capture more of the top of this channel, more of the bottom of this channel. We'll start with the same amount of TBTC. And then when we perform the simulation, we'll see that we get a slightly different ROI. And so it's not always true that, by using a range, that you're going to get necessarily a better result than if you just use a strict limit order. And this is why the simulator was invented, so that you could run these estimations for yourself. And if you ever wanted to audit these results and determine for yourself whether or not you think that it's the right way to trade, you can actually just download the simulation data as a CSV and open that up in whatever software you want, and see exactly how all of these prices would have been executed and exactly what would have happened to your order and your position on Carbon during that time.
Thanks, Mark.
I think we're close to the.
We are close to the end here. But I wanted to ask you consider that an exotic trading pair. Do you not see, maybe because it was TBTC that you were using, or do you consider Bitcoin versus ETH to be an exotic trading pair? Just kind of open question for all three of you.
I do, but not because it is not because it's implicitly exotic. I think a lot of people do trade that pair. But if you have a look at the actual volumes, right, the order book sizes of Bitcoin denominated in ETH and ETH denominated in Bitcoin, they are, if that market disappeared, Bitcoin wouldn't even notice. The US dollar books are the ones that by and large dictate how that market moves. There's a reason why when Keith presents his FireCharts, even though he can see the Binance order book for ETH BTC, and that's for people who aren't aware, Material Indicators has access to data on the altcoins and things as well. It's not just the Bitcoin USD pair. But the Bitcoin USD pair is the one, like, if you're going to make a good decision, that's the one that you should be paying attention to, because it's where all the liquidity is. So I do consider, ETH Bitcoin to be exotic, just because it's less popular.
Right.
I like it just because, especially if you're grid trading like that, whichever one you end up with, you're still going to be okay, right? So if you end up with more ETH, you're okay. If you end up with more Bitcoin, you're good.
It's coming back to it's not about making as much money as possible, but not losing,
Koryo, I know that we are at the top of the hour. Are we okay here for a few more minutes? I'd love to give Koryo the opportunity to kind of.
I want Koryo to tell us how to make as much money as possible.
Okay, let's go straight to the point, and let me share the screen so I can share my thoughts. Boom. Okay, let me know when you can see my screen.
Gotcha.
I think it's the case. Okay, so I heard the end part of Mark's view on the markets. Maybe I can actually continue on what he was saying. He was talking about the Bitcoin ETH pair. I think something interesting is to talk about the Bitcoin dominance, and it's somehow related to what he was talking about. So Bitcoin dominance, that's an important chart here. Let me first remove all these things. So in a bull market environment, we see the dominance of Bitcoin sharply going down. Happened the first time we had some kind of DeFi or alternative options to Bitcoin here, and then in 2021 bull market as well. We haven't seen anything similar yet, which for me indicates that compared to Bitcoin, alts haven't yet had their time, and this is going to come. This is one thing. The other thing is how high can Bitcoin possibly go? Bitcoin dominance can possibly go. Right now, we are around 54%. We've had the ETF news. We've had the halving. Can it go higher than that? I've already tweeted about that, but I think, in my opinion, we are less likely to ever see actually Bitcoin dominance above 60% in any case in the future, in my opinion. This is just because we have so many new projects and protocols and L1s and L2s, etc., that Bitcoin can just simply, theoretically, in my opinion, not find the dominance that it once had. And if you see here, 2016, even in the peak of the, in the best cases, the highest dominance of Bitcoin, we were at 71. And I think this will consolidate in a range for the upcoming years and decades, in my opinion. So I don't think it will go any higher than 60%, and also I don't think that it will go lower than some ranges, which I think around 40%, because it's still the king asset, the king cryptocurrency, and hedge funds and institutions want to have exposure to Bitcoin and not to even Ethereum and other alternatives. So I think this is a range that we're going to see Bitcoin dominance in the next years. This is one thing. Now, what does this tell us about the alts and about Bitcoin? So we are seeing here already a consolidation with momentum indicators resetting, but it's holding there. It's holding, although we are a few months past the ETF news, and maybe it's because of the halving that is still, holding here very strongly against other altcoins. But in my opinion, if I had to take a bet, I would bet on actually something like this in the upcoming month for Bitcoin, meaning that I think that alts will start to outperform sometime in the next month. Remains to be seen when it happens, but let's go now to maybe total 3. It's a good chart to see. The total 3 is actually all the market cap of all crypto assets, excluding Bitcoin and Ethereum. And here, strong uptrend as well. But if we compare to 2020 where we had the halving, still a lot of upside here possible. So I think the trend and the bet that I'm taking is we're going to see actually also starting to outperform in Q3 and Q4, certainly, in my opinion. Q2, I'm not that sure, because usually the halving is actually the Bitcoin moment. So this is what I think about alts versus Bitcoin. Now, what do I think about Bitcoin itself? Yes.
Really quickly, you missed in the beginning when they were talking about Keith. I've got a dog barking. I'm sorry. When Keith and Mark were saying that after the halving, we've seen, 20, 30% drops. So maybe this is kind of related to what they're saying, but you're seeing it going into the alts, right?
Yes. So it's true that immediately after the halving, we can see some kind of quick pullbacks on Bitcoin and on all altcoins. To be honest, do I think that we're gonna see that kind of pullbacks on Bitcoin? Really, I don't doubt. I doubt it. Actually, I doubt it. So let's see how low can it go. In my opinion, even if you do a Fibonacci from here, so if I had to take a bet, I would say Bitcoin will never go below 64. In my opinion, in 2024, that's the lowest price. Not in 2024, let's say in the upcoming month. I think, we've seen some pullbacks here. It's actually, we have a range, I would say in the 60 to 70, but now possibly, I think higher with the upcoming halving. So, and that's from here, from the current prices, that's not even 10%.
And that's consistent. That's consistent with, I think, what looks like a local bottom around 64.5, 65-ish right now.
Absolutely. I think I really would exclude a pullback below like this level, Fibonacci level at this time. Even if you look, from the previous rallies, we rarely had anything below that. Even if you look here, when it all started, we just went again to close to this 382 level, and that's from where we had on this start of the rally in 2023. So since then, every kind of new leg has at most pulled back to this level, and maybe that was the case here. Maybe it happened just there, and now we are going to see an uptrend. But I'm not betting against Bitcoin going down. I'm not. I think that we are probably ranging here between 60K to 70K. I'm not taking any action in this range because I'm already positioned and I've already bought these dips and that I've also shared. So I'm just patiently waiting for more upside to come. I think if you remember our bets that we did, I think I still bet on Bitcoin around 80K for the end of the year with possibly higher values until then. So even 100K, I still hold that bet. And if we have to have a pullback that is higher than 10-15%, I think the pattern for me, as I would bet on it, would be something like this, some chop and then higher, and then here maybe some kind of pullback here, but again probably not below the current values, and then from here resume higher. So that's how I would position myself. That's the bet I would take. Obviously I can be wrong, but historically, if you look at the past, cycles, post halving, etc., that's the kind of things we see. So yeah, this is just shortly my current views on the market.
Koryo, Keith, looking at what he was kind of just drawing up there, right? Is that kind of where your golden pocket was that you've been talking about?
Well, the golden pocket was the around where?
Up to like the 100, like the 80 to 100 or 90 to 100.
No, the golden pocket. The golden pocket I was looking at was actually below us. That we came through, and so now I think that we need to validate an RS flip above 69K, which hasn't happened. We've wicked below it again. At the moment we're just sub 69K. So we need to see some strength happening at that 69K level so that we can take this consolidation, because, like Koryo said, this consolidation range right now is really wide, right? It's it is almost too tight. I mean, too wide to say, hey, here's the range and here's the level of support. It's a very wide range right now. 65, we've had this series of higher lows which brings us up to that 64.5, 65K level right now, in terms of what looks like a local bottom. And that's consistent with the structure I have and consistent with the 50-day moving average on my daily chart. And I think that tomorrow, a good inflation report, a cooler than forecasted inflation report, could really see Bitcoin with a chance to establish some strength above 69K. Without that, I think that we consolidate, back into the 65 to 70K range for longer until we get that strength. And around the halving, I don't know if we will see the deep correction that I've been wanting. The market doesn't do what I want. Market doesn't give a shit what I want. I just prepare myself for those opportunities if they present themselves, right? So Koryo may be right. We may never see another dip below 65K, and that would be great, right? I've got orders there. I'm good with that. Let's get those filled and move on. But I'm saving some dry powder just for that,
If it happens.
somewhere down the road, whether it happens from this level, whether it happens from the 80K level, whether it happens from the 100K level, there's going to be a deeper correction than these 10 to 19% corrections that we've been seeing in the
Absolutely,
past few months. So I'll hold that powder until that comes.
Absolutely, I agree with Keith. I think that we're gonna see 10 to 25 even percent corrections in the upcoming month. The real question is at what local top this is gonna happen. I'm just gonna conclude with maybe a very quick word on the RSI. On the weekly, first of all, it's important to notice that we don't have a bearish divergence here, although this kind of patterns usually many times have bearish divergence on RSI, like we saw here, like price going higher, but with the bearish divergence. But now we are, we did a higher high in price and in RSI, so still holding even below that moving average of the yellow one. So even on the RSI, we are very bullish, but also notice if we look at the top of this recent RSI move, then the only few times it happens, it was very close to the top of the bull market in terms of price action. So at least in 2021, in 2013, it was also almost the top. Here we had a big correction, and in 2017, there were a number of resets, etc., that would provide best opportunities. I think this is something great. This is a reason why I like to always look at the price action in a bull market environment, and I like to buy a reset of momentum indicators like the MACD, as it was mentioned, and RSI, because sometimes the price is not really going down. So as you see here, it's looks like kind of choppy here, but the RSI every time is resetting. So every time, this is like, what is this? This is 20% correction. Might not look much if you zoom out, but you had a good correction in RSI. So this is providing good entries. So this is also the kind of pattern I'm looking. So even if you consolidate even longer here, then the price might not go down, but something like this will result in some RSI pattern like this, and then this would provide a good entry no matter what the price here is. So this is also something to look for.
What's interesting about what Koryo was observing during that 2017 bull run, when I don't think he was on the call when I was talking about it, that all of those RSI resets are commensurate with coming back to check the 21 or the 20 EMA and SMA. Like we're referring to the same thing. It's just that we're using a slightly different perspective, but we're observing exactly the same phenomenon.
Well, I think something that we can all agree on, two things we can all agree on, is consolidation at this stage is healthy, and dips are opportunities.
Absolutely.
Yeah, exactly.
Koryo, I want to ask you one more question, then we can, close it up. You were saying that you see Bitcoin dominance, the alt kind of gaining a little bit of that, right? What are the leading narratives that you're seeing right now? Go ahead.
In terms of narratives, let me also again share quickly. we remember that real-world assets were performing pretty well last month. So if you look at the this year in 2024, we know about memes. Memes and real-world assets perform pretty strongly, as well as AI tokens and some LSC tokens like Pendle, because there we had the restaking narrative, which contributed to some LSC like tokens like Pendle. However, this month, right now, most of the narratives are down. We are not observing very strong kind of performance here. There is just one token that had on account abstraction a catalyst, so nothing really, nothing to attribute to this narrative in general. And ordinals is kind of like memes and Bitcoin or NFTs. So it's interesting that these are outperforming. Other than that, like from the narratives with higher fundamentals, for now, most of them are down, and there is nothing that is really outperforming here. The Bitcoin narratives is here, NFTs, L1s, L2s, etc. So it's the first month here. We are seeing a -7 performance MTD for now, but for now the year is positive. So one of the first months that would if April concludes like that, which I doubt, because historically, we showed that once, but historically, April is the most bullish month of the year. And generally it's interesting how these things develop. For example, I was paying really attention to September last year and the year before that, because everybody knows and that September is a bearish month, but it doesn't start from day one with a big dump and then everything goes down. Usually actually the reverse happens. So you might get actually prices go up in beginning of September, and then all of a sudden in the last 10 days of the month, everything goes down aggressively. So maybe something like that will happen. I think because we are having the halving, I'm still having very bullish expectations in April, although for now it hasn't been a good month for the markets. But narratives related, nothing really outperforming as of now.
Okay. Well, we can keep ourselves updated there on your Dune dashboards as well. I'm glad that you were able to make it after all. Thank you for jumping on here. Keith
Always
and
happy
Mark,
to be part of the call.
Thank you so much.
I say Koryo starts next week, so we get to hear more.
Yes, we can do that.
Koryo, that's it. It's official then. You're going to be our starter next week.
Okay, deal.
Awesome. Thank you guys so much for jumping on here. We'll actually next week we might have a little bit of a different date and time. I think the next 2 weeks, Mark and I are going to be in Dubai. If any of the viewers are in Dubai for Token 2049 or ETH Dubai, definitely reach out to either one of us. Let us know. Would love to get together. I might even have a ticket or two to give away for ETH Dubai. So keep everybody updated on that. And I'll make an announcement if I do, in fact, have those to pass off to the viewers. Thank you guys again. And we'll catch up soon.
Thank you guys. Have a great week, everybody.
Thank you.
See you guys.
Thank you, everyone.